Hey, how's it going, everyone, and happy Saturday. Hopefully you all are having a great day. Okay, so this video is going to be straight to the point, pretty much some educational content, and the description of today's video is going to be a playlist for this YouTube channel. I put out videos on this YouTube channel Monday through Friday. On Saturday, I'm starting to post a lot of free educational content, pretty much for anyone that is really thinking about getting into the stock market, maybe just wants to get some more information, and really on the fence of kind of really getting started. Well, something that you should really dive into is learning about two main things: fundamental analysis and also technical analysis. Today is very much going to be technical analysis, which means going on the charts. So today is going to be very much a chart-driven episode. And yes, it does matter even if you are a long-term investor in many, many stocks out there like I am. You have to know the charts because the charts can signal to you, hey, maybe this stock that you are buying for a long-term investment, it's really too overbought in a way, or very much oversold. I'm going to get to those terminologies momentarily. But when a stock is trading very, very rich, it's very much above where it should be at, it could very much signal to you saying, hey, let me just go ahead and hang on for a little bit of accumulating shares. Maybe there's going to be a pullback. Maybe I can actually pick up some cheaper shares for the future. So all this stuff really ties into investing. I'm not a financial advisor, but I do have a lot of knowledge when it comes to a lot of this stuff, and I don't mind sharing it publicly. So let's go ahead and get started. Today's episode, I want to focus on the RSI, aka Relative Strength Index. I want to go ahead and talk about why it matters, how you can actually view it, how to read it, and also understand the different setups that it can really have for you. Because a lot of people look at the RSI in maybe a one time frame moment. A lot of people don't actually know that you can look at the RSI in many, many different time frames. So firstly, what is the RSI? This is a word that is a three-letter word, or rather, it's not really even a word. It's three letters, okay? It's not necessarily a word, but it's the Relative Strength Index. It is made up of a bunch of moving averages, and if you watch a lot of Wall Streeters, a lot of them will actually throw out words like RSI, if a stock is overbought, if a stock is oversold. So if a stock is overbought, that means the stock is trading very, very high, way above the moving averages, way above the main bulk of the relative strength index, aka the RSI, and it's just very too rich. It's gone up way too fast. It needs to come back a little bit, pretty much consolidate, so all the moving averages basically get caught up and the evaluation makes sense. Because here's the reality. When a stock runs up really, really high, it can be, one, fundamentally overvalued. So that means, keep the numbers simple. Let's say the company has phenomenal assets that are worth $1 billion, and let's say that they're coming in with a lot of profitability, their margins are great, the rule of 40 is absolutely phenomenal, the forward guidance is amazing, but so much stuff has been factored into that company. The company is now trading at a $10 billion evaluation, aka their market cap is $10 billion. Not to mention the charts are way above the moving averages, okay? That is considered overbought. It should not be worth a $10 billion company. Okay, maybe it should be worth maybe in the middle, like maybe 5 or 6 billion. It's overbought. So if you ever hear the term overbought, it basically means that the stock is overvalued. Now, if you hear the term oversold, that means the stock is undervalued. If a company has $1 billion worth of assets alone, and the company is trading at a market cap of, let's say, maybe $500 million, and the company is profitable, the company isn't facing bankruptcy, well, in my opinion, that's a steal of a deal. The company is fundamentally undervalued. Not to mention the stock might be very much trading very much below the moving averages. So I want to go ahead and show some examples of what all that stuff pretty much looks like here. I have my chart very clean on the screen. No moving averages whatsoever. I do have the relative strength index on the bottom here. And I also am on the 1 minute time frame, okay? And I'm going to be showing multiple different time frames here momentarily. I'm also using TradingView as well too. Unfortunately, I don't have a coupon code for TradingView. I'm not being sponsored by them. Wish I did, because TradingView is a little bit expensive, but if you wait until Cyber Monday or Black Friday, you can actually get TradingView for a annual subscription plan very, very cheaply. So definitely stay tuned for that if you do ever want to actually buy like a TradingView subscription. If you're using Webull, you don't have to have a subscription to have moving averages and stuff. Robinhood sucks when it comes to all this stuff. Webull is definitely the king. But I have Webull. I also have a brokerage account on Robinhood too. And my public profile dedicated to this YouTube channel is a Webull account. I show my private profile, my public profile yesterday if you want to check that video out. I'm using SoFi as an example here because there's a lot of really good stuff on the charts when it comes to SoFi. So, on the screen, pretty much behind me here on this green screen that I have, you basically notice on the 1 minute time frame, there's a lot of momentum. Now, why would you use the 1 minute time frame? Because you are day trading a stock. 1 minute time frames are very much quick, in and out day trades, okay? Day traders use the 1 and the 5 minute. Also, 15 minutes are also really good for day trading. I'm not doing a lot of day trading. I did a lot of day trading several years ago, but right now I'm just really sticking to very much long positions and also very long swings for some of my positions as well too. But if you're good at day trading, you can definitely make phenomenal money. Just understand that day trading is very different when it comes to investing, and it's definitely in and out shorter term. That's the reason why the 1 minute chart is primarily going to be revolved around day trading. Now, on the relative strength index on the bottom of the screen here, if it's above 70 on the relative strength index, that is considered to be overbought, okay? If it's below 30, that is oversold. So if you notice, pretty much on Friday, yesterday, SoFi opened up and we just had massive volume going to the downside here. Look at the RSI primarily. The RSI pretty much was all over the place, very, very low. I mean, you had the RSI very much at 50 and then on the low side of 30. I mean, you're talking about from 1665 all the way down to 1640. Obviously, SoFi is not a penny stock. If I was using a different type of stock, like penny stock, penny stocks tend to have very volatile swings of anywhere between a couple 10% or a couple hundreds of percents here. But for just this example primarily, once volume actually started to pick up, you notice the relative strength index went up very, very quickly on the charts. Now, let's go to the 5 minute time frame here. Obviously, each one of these candlesticks represents 5 minutes. What do you notice here too? Well, the 5 minute is very much zoomed out. So 5 minute, once again, a lot of times day traders will love to use. And when I say day traders, I mean someone that wants to be in a stock for maybe 30, maybe 45 or 60 minutes. Not someone that's going to be in a stock like several months or several years, right? But the 5 minute time frame, pretty much the same exact thing. Very quick, very momentum based. Obviously, each one of these candles, they're not 1 minute. They are 5 minutes. And you notice anywhere between 10:40 all the way up to about 11:30, so about like 40 minutes-ish, you had the RSI show a solid momentum pretty much upward. Let's go ahead and zoom even farther out to, let's say, the 15 minutes, and it's the same exact thing. On the 15-minute time frame, you basically see the similar thing. Obviously, a very big push down on the stock price, which is also the RSI, and also a very much momentum up. Now, how does reading the RSI come into investing around like SoFi? Zoom out. Go further out on your time period. So instead of looking at 15 minutes, well, look at 1 day. Yes, 1 day. So each of these candlesticks represent 1 day. Okay, 1 trading day, not like a Saturday or a Sunday. Represents 1 trading day right here. So what do you really notice? Well, back in pretty much the end of March, it was the entire market was very much to the downside. We had the relative strength index 21. I myself was buying a lot of SoFi shares and a lot of stocks in general because SoFi on the charts was oversold way below 30. And yes, I have seen the relative strength index in like the single digits before on stocks. I think it was PayPal that I saw it once. But when a stock is very much going down, oh yeah. We even go further back to, let's say, February. Relative strength index 20, lower than where it was at the end of March. So yes, if you're looking at the charts and you're like, whoa, wait a second, SoFi is trading at a 20 RSI. Well, I want to pick up some discounted shares for the future, which I did. Yeah, it's a good time to buy. Obviously, we go very much back to, let's say, April before their earnings, and SoFi tends to very much run up before their earnings, but you notice how the RSI, it's not overbought. It's getting a little close, but obviously their earnings, their guidance very much shifted, and because the stock price fell, obviously the relative strength index fell too. Now, if you're doing super duper long-term investing on a company like I am on SoFi, your best friend would very much be the 1 week time frame, which I love. So back last year, what do you notice about the relative strength index? Once again, the farther you zoom out on a stock, the relative strength index is going to give you a little more clarity, especially if you're investing long-term. Very, very much future years into the future, right? So I actually was not buying any shares of SoFi during all of this period. All of this period. A lot of people were. A lot of people were buying SoFi in the high 20s. I was not. A lot of people were buying SoFi close to $30 or at all-time highs. I was not. What do you really notice? Well, the relative strength index on the weekly chart, way overbought. You're talking about 85. So I remember looking back at SoFi back in October, November last year, pretty much during all this consolidation. And I'm like, hey, a couple of things are going to end up happening. One is we are going to just consolidate to really level out this relative strength index, or we are very much going to fall off because there was starting to be a lot of fears in our economy last year about the government shutdown. Government shutdown was happening. A lot of uncertainty was happening. So it forced a lot of stocks to very much go down instead of just consolidating. But I mean, hey, SoFi could very well have consolidated for several months. Yes, a stock could very much trade in a bound. I've seen stocks trade in a range bound before, where a stock is just very much moving up and down in a range. Like SoFi could have done this for many, many months and then finally had broken out. But obviously geopolitical events happen. The stuff in the Middle East happened. A lot of fears with inflation. So it caused the overall stock to go down. But what the chart indicated to me is that, hey, one of my long-term assets are very much going down on a technical basis. However, the company fundamentally is going up. So I'm looking at the charts and I'm saying, when would I start buying more shares? Well, $25 made a lot of sense to me. That's where I had a lot of price targets at. And I started buying when it broke 25 bucks and started buying and buying and buying. And on the relative strength index, pretty much it was at like 58, which is pretty much like a neutral ground. If the relative strength index is like in the middle, in the 40s, the 50s, or even close to 60, it really a lot of times is a coin toss on the chart of which direction it can go in if you're just looking at the chart. But, hey, SoFi ended up breaking down, and I ended up picking up more shares. So understand that if you are making long-term investments in the stock market, yes, obviously fundamental analysis does tie into everything, but at the same time, technical analysis, moving averages, and also the relative strength index, aka RSI, it does play a big role as well too. Now, one other stock that I want to go ahead and look at before wrapping up today's episode is a stock that is, oh man, this one is definitely very, very talked about, okay? And this is where a lot of long-term investors will look at technical analysis and they will say, get it away from me. Get it away from me. I despise technical analysis. It's stupid. It doesn't work. It's a lagging indicator. Why are we looking at moving averages? Why do we even care about the 50-day, the 100-day, the 200-day? Why do we even care about the relative strength index, right? AMD. Oh man, AMD. If you've been following me on YouTube, on this YouTube channel for a while, I was buying AMD shares below 200 bucks publicly earlier this year, and oh man, AMD, woo! Not to mention I was buying AMD shares last year during Liberation Day below 100 bucks. A lot of people thought AMD was going to be like nothing, and it's very much something. Why does technical analysis fail on AMD versus on SoFi? Here's why. The fundamentals are here. AMD is about to show shock and awe fundamentals. Their earnings are going to be unbelievable. Therefore, technical analysis doesn't matter because AMD has the fundamentals to back it. Will AMD experience a pullback to the 50-day moving average of 286 bucks? If it does, I'm buying more shares. Why would AMD crash to 286? It doesn't make sense. The company is going on a growth cycle like you can't imagine. Their earnings are going through the roof. So therefore, technical analysis, it goes away. Now, SoFi, if you look at SoFi, way overbought on the weekly chart, right? But understand that fundamentals, it was too rich. Back at all-time highs last year, before we had January and also April, and now soon to be July earning, 3 quarters of earnings, we were way trading rich. A lot of long-term SoFi investors don't want to hear that. It's the truth. We were trading, I believe, at a 60 multiple. Don't quote me on that. It was either a 40 or 50 or 60 multiple. It was too rich. Way too rich of a multiple, okay? Way too rich. Obviously, SoFi followed technical analysis because it was fundamentally overvalued. AMD, I could be wrong. Maybe I am, or maybe I'm not wrong. But AMD is, the fundamentals are there. So when it comes to technical analysis, when it comes to the relative strength index, understand that it does matter, but at the same time, you got to have what to really back it. You got to have the fundamentals. If the fundamentals are not there, the relative strength index, hey, we are overbought. We are way above everything. You're going to come back to reality, okay? So definitely take that with a grain of salt. Good vibes all around. Thank you all for watching, and if you enjoyed today's episode, smash the like button, subscribe for more new videos on this channel on Monday. Later, everyone.